Because it's difficult right now to try to find a home. Sometimes, it's not the right neighborhood, or it's, not the home you love. Okay. So when that happens, you got one option, especially if you want that neighborhood or you want that style house, you either take it as is and renovate as you go, right? So you buy it, you're going to do renovations, and you just kind of save for it, right? Through the process while you have the house. Okay. A lot of people do that. I've done it before. Or what you do is you get a home renovation loan. Okay. And here's two of them out there that I suggest if you, find a home you love in a neighborhood that's, that you like, right? The location, and you just can't find a house that's going to meet your lifestyle or your needs. Okay. So get a home renovation loan. Two of them I recommend. First one is the home style renovation loan. Okay. This home loan is through Fannie Mae. All right. It's not as good as the next one we're going to cover. Okay. But it's still a good foot in your door for new homeowners that want to buy a house and they want to renovate before they move in. Okay. Definitely gives you that time to get your house in order. Okay. You can qualify with it as low as 3%, which is awesome. Okay. So that's 3% down of the purchase price. Okay. It's going to feature, a little bit lower interest rate, than trying to do maybe some hard money. Okay. Because hard money, we'll talk about that at the end, but hard money is your other option. Okay. And that is, going through a personal loan or an investor. Okay. So if you're going to use the Fannie Mae home style loan, okay, one, you're going to need a contractor. All right. So for both these loans, you need a contractor. All right. That's the key to everything, is get a good contractor. All right. One that has to be licensed. Okay. And they need to know what they're doing. Okay. Because throughout the whole process, the bank's going to check. Okay. Make sure everything's going as you order. Right. So, and next thing is you need to list everything you're going to do to the property. Right. So make sure you do that. But Fannie Mae home style loan is great. Okay. Renovations costs are limited though. Okay. So 75% of the after value repair of the home, with up to 50% cap for manufactured homes. Okay. So they're going to basically give you 75%, all right, of what the home would be valued after. Okay. This is after you do your home renovations. All right. So they're going to cap you out of that. All right. But a positive though, okay, is again, it's the 3%. You put 3% down, and that's for the home. Okay. So 3% of the purchase price, and you're going to get a fixed rate loan. Okay. And what I tell everybody is, once you get your loan, okay, you do the repairs, refinance out of it, go to a conventional loan, take that money you just made, because so ARV, right, after renovation value, it's going to be higher. You can use that money to do whatever you want with it. Okay. But take it out, go conventional, stuff like that. So, Fannie Mae home style loan is good. Okay. But you're not going to be able to, like, as anything else, you're not going to be able to access as much. Okay. There's not going to be as much access. And there's a ton of paperwork. Okay. Because like I said, you have to go line by line by line when you do this loan. Okay. So it's not super easy. It's not user friendly at all. Okay. But for 3% down, okay, 3% down, you basically get a house and the renovations paid for. Okay. So, something to think about. All right. Something to think about. The next one, and this is the one that I recommend. I like this a little bit more than the Fannie Mae. It's called the FHA 203K loan. It's kind of, like I said, it's like the Fannie Mae. It's another government-backed loan. You can fund and you can do the renovations at the same time. Okay. So there's no flip-flop. You go right to it. All right. But the only, the con here is it's capped at 35K. Okay. So you can only go up to 35K of repairs, right? So it's the house, right? Plus 35,000. Okay. So it's not too bad. The difference with this one is, again, it's not as much paperwork. Okay. But you do have to put 3.5% down on this loan. Okay. It's not as user friendly. Okay. It's more user friendly, but you have to put, another 0.5% down on it. Okay. So think about that. Income and it's less stringent, all right, than the Fannie Mae home style loan. Okay. Uh, you know, and you may be eligible for a larger tax deduction, okay, because it's a larger loan. All right. Some of the cons, you're going to need mortgage insurance with it. Okay. It can only be used on your primary residence. Okay. So remember that you have to use these loans on your primary. So you basically have to plan on living in them. Okay. So that's what the government's going to want to see. And there's a list. All right. There's a list of remodeled projects, okay, with the FHA list. Okay. So if you're going to go in there, you're going to buy a house and you're going to, renovate it, you have to kind of keep that list. Okay. Closing costs generally range from 3 to 6% with these loans. Okay. So remember that. Just have a little bit of cap. But hey, if you were going to buy a house, right, and you basically needed to, all right, you can get the seller to cover at least 3%, sometimes 4% of your closing costs, which is awesome. Okay. So as long as you have a good realtor, right here, okay, you can get the seller to pay for those closing costs. Because a lot of times, like me, if we have a house that's off market, I bring it to one of my buyers, they're going to look at it and maybe it needs some repairs. Okay. So boom, they're going to automatically want to get rid of their house because they're usually in a pinch if they come to me. So they're going to pay for your closing costs. So that 3 to 6%, you can tack that on to the seller and have them pay for those closing costs. Okay. So, it definitely helps out. All right. And that's really the two loans I recommend. Okay. Fannie Mae Home Style and FHA 203K loan. Now, again, there is paperwork involved. There's certain lists and timeframes you have to go through, all right, with each one of these. Okay. But for as little as 3% down, okay, you can get the house and the repairs covered, right? So I don't know. It really comes on you, right? So instead of living in that home and trying to fix it up yourself, which is what a lot of people do, okay, you can literally buy the house and, a month, 3 months down the road, you can get it repaired. You can be lived in, ready, right, and ready to go. And some people, like I said, it works, right? That'll work for a lot of people because, they're not looking to, they're not really looking, for a brand new home. They want to pay for that. Okay. If you can find a home that's been lived in, maybe a little rundown, maybe, a decade and a half old, and you want to, remodel it, go to town. All right. Go to town, use these loans, and you can do that. The other way of doing it is using what's called a hard money loan. Okay. Now, this is what investors do. Okay. This is, kind of what I do if I see a property I like, right? I'm going to go and grab a hard money loan and I'm going to put that in there. Okay. But again, I only plan on carrying the property for, 1 to 5 months at the most. Okay. So the difference here is, though, these hard money loans, they usually charge between 10 and 20% interest. Okay. So if you don't plan on holding the property, you don't plan on living in the property, you just want to flip it, it's great. Okay. But if you plan on owning the property, all right, I suggest the other two. Okay. Because you really don't want to kind of run into it with that 10 to 20% interest rate because then you're going to have to refinance later. I mean, you could, let's say you can't get conventional financing like the FHA 203, or you maybe just don't qualify, right? For the credit. Okay. The hard money guys, they're going to look at the property itself, the ARV, right? After renovation value. That's what they're going to look at. Okay. So you can use that. But again, higher interest rate, and a lot of time you have to put 10% down for the hard money loans. Okay. So it's, you got Fannie Mae 3%, FHA 203K 3.5% down. With the hard money loan, you're putting 10% down. Okay. And that's 10% of the home, right? And 10% of the repairs. Okay. So a little bit different, right? Just, you kind of have to know what you want. Okay. And how fast you turn around. Because you could go hard money if you can't get the loan through FHA or Fannie Mae. You can go hard money and just refinance later on down the road, which is what I would recommend if you went that way. But I wouldn't hold on to that bad boy for too long. I do maybe 3-4 months. Get in there, get the repairs done, pull all your draws out. right? Do everything you can. And then as soon as you get that bad boy ready to go, refinance into conventional, because by then you're going to have money in the house. That's what banks want to see. Okay. But yeah, any questions at all about, how to get started in any of these, please let me know. Love to help you guys out. Let's see here. All right. So next thing I want to talk about is a great loan program coming back that's getting refunded. The Lighthouse program is coming back to Pima County. So I know some of you guys have heard me talk about this, but I just want to put it back out there. Okay, it's coming back again, and it's going to be here mid-October. Okay, so if you're looking to buy a house, or if you know anybody looking to buy a property, I highly recommend. Okay, highly recommend. You send me a text, give me a call. Let me get my financial wizard to you so you can get set up with this. Okay, because one, it's going to lower your interest rate from 7%, over 7% right now, and it's going to drop it down to 6.2. Okay. Next is it's going to give you 4% of the purchase price for your down payment. So it gives you down payment assistance of up to 4%. So 4% of the purchase price, right? So it's $300K house you're going to buy. That's $12,000 you can use for closing costs, your down payment, anything you really need is as far as goes with the purchase of the property. Okay. So think about this. It's a great program. If you know anybody looking to buy a home right now, this might be a killer deal. I'm telling you guys right now. The caveat is though, it's only 25 million. Okay. And the last 25 million went in 3 weeks. 3 weeks. It went in 3 weeks. So I'm assuming this is going to go even faster. So I'm thinking 2 weeks. It's going to go quick, guys. So if you know anybody out there that's thinking about buying a property, okay, or if you're looking to buy a house, definitely get a hold of me. Send me a text. Shoot a flare up. Okay, get a hold of me. Let me know. Okay, and we'll get you all set up. All right. But yeah, so we're rocking and rolling. All right, everybody. Got to get back to it. Got to make phone calls, and I will talk to you guys next time. Have a great evening, everybody.